Procter & Gamble announcing fourth quarter results just minutes ago. Earnings coming in at $1.48 a share. That's 6 cents better than estimates. That's on revenue of $20.9 billion, ahead of expectations. Join us now to break down the numbers, and far be it from us to bury the lead. Did you know in this business, John, and it's good to see you, in this business, lead is spelled L-E-D-E, just so people don't think it's lead or just so people don't know. You are leaving the company on the first of the year to be replaced by a guy a little bit younger than you, but he started, the chief operating chief, Shailesh Jejurikar, started in 1989, and he must have been right out of college, because he must have been about 22 or 23 years old. So he is truly, as many people at this great company, Cincinnati-based company, they're lifers, and he is a lifer, but it's a surprise. You're only 61. What's going on?
First of all, I am transitioning to the executive chairman role as of January 1st, but I'll remain an employee of the company in that role. Shailesh is a great guy. I've worked with him for many years. He's worked for the company for 36 years. As you mentioned, he was the COO most recently, and he and I worked very closely in that capacity. And I'm excited about the additional perspective and contribution that he'll bring to the company. We're in very good hands. In terms of what's going on, I, as of January 1st, will have served 38 years for this wonderful company. My wife, who also worked in an executive leadership position and retired when I became CEO, between the two of us, as of January 1st, we'll have served this company for 7 decades, almost 3/4 of a century. Results recently have been very, very strong. If you just look at the last 7 years from when we implemented the strategy that we've been executing against, sales up $17.5 billion, 84th percentile in the S&P 500, earnings up $6 billion, 92nd percentile in the S&P 500. We've created an additional $180 billion in market cap, more value than all but one of our competitors have created in their 1 and 2 century histories as a company. So 7 years plays 1 and 2 centuries. We've created the 18th most valuable publicly traded company in the United States, the 21st most valuable in the world. All not bad for a old economy soap company. And so it's time for me to bring on the next generation, which I'm thrilled to do.
Yeah, we've talked a lot, and we always appreciate you coming on every quarter and talking about it. But the management travails of Procter & Gamble that we followed over the years, I've thought the company finally had its guy. Remember, AG had to come back to save the company, and there were some, I don't know whether I call them lemons. We don't need to mention any names, but some of the CEOs weren't quite as well received. But you've had a lot of success, especially emerging from the post-pandemic, John, and you've done some really big changes, put in some really big changes around the globe for Procter & Gamble that was like turning around an ocean liner, really. So it was surprising. Did you decide this yourself? I mean, being totally honest, is it why do you think you need a new look at how to run the company at this point? So
a couple things. One, big multinational business, particularly in the environment that we're operating in, is not a me sport, it's a we sport. And we have a great team, which gives me peace and comfort in moving on to other responsibilities. Second, Joe, I debated whether to tell you this, but you and I have done 70 consecutive quarterly interviews, and I just wasn't sure. I just wasn't sure I could stomach the 71st, so I figured.
That's not nice. That's not nice.
Wait, you're not out of there yet. You've got 2 more to go, John.
Yeah, and you would think you'd be pretty good at it by now. I don't know. I mean, you had pretty. Can we count on you convincing Shailesh that this is the right thing to do every quarter? I mean, is it we going to be at 100 at some point for consecutive quarters?
It's
I'm
not on the
counting on
top of the transition list, but we will work on it. Definitely, I commit to that.
Just put in
17 and a half years you've been doing this with us?
Put in a good word for us.
A while, yes.
Oh my
well,
gosh,
at least you are still going to be around. I didn't look today, but you might see the Reds make the postseason. There's still a possibility of it, so that would be good before you're gone. What about commodity prices and headwinds and organic sales growth and all the things that we've talked about ad nauseum for 70 straight interviews?
We're growing. We continue to grow, albeit modestly in the current environment. And the last quarter was our 39th consecutive quarter of organic sales growth. The fiscal year that we just completed marks our 9th consecutive year of core earnings per share growth. As markets have declined somewhat given the amount of consumer policy and political and geopolitical uncertainty, that growth is more modest than it has been at some times when we've talked. But it continues, and it's broad-based. 9 out of 10 categories grew, and we continue to hold share on a fiscal year basis. So things are in, again, very good control. We announced about a month ago a restructuring program to strengthen the execution of the strategy to hopefully accelerate that growth as we move forward. I'm very pleased with that. That'll give us some more financial headroom. It will focus our efforts on businesses that really matter in terms of growth on the top and bottom line, and it will provide an opportunity to further refine our supply chain. So I leave as we strengthen the program that has been very successful over the past period of time.
You know, the dollar hasn't been so strong. You got more headwinds or tailwinds with currency and commodities and tariffs? And I mean, how's the consumer? Are you seeing some signs?
Consumers under some pressure. The consumer's under some pressure, but where we're seeing it that manifests itself is in a little bit of trade down within the portfolio. If you look at private label shares, they're down year to year, both in North America and Europe. So it hasn't led to a flight from performance of brands that really make a difference in my life. But it has led, for example, for some trade down from one form of Tide to another form of Tide. We also see it in their consumption levels. They're being a little bit more judicious in terms of how much they consume. So there's definitely an impact which translates to slower market growth, which I referred to earlier. But markets are still growing. We're growing within them. And we've got strong innovation that we're bringing to market to sharpen that value proposition for consumers and hopefully accelerate growth.